Welcome to Maximart. Please subscribe to my channel and tap the bell to get notified about all new video on this channel. Hello friend. Now we are going to discuss on RBI monetary policy. For RBI monetary policy, first I told you RBI is the Central Bank of India and all type of cash saturation are maintained by RBI and RBI for maintenance for this there are monetary policy and some term condition or using something. These are SRR, SLR, bank rate, repo rate and reverse repo rate. These are with weapon to using to control the monetary policy of India. So first we know the what is the primary function of RBI. Now primary function of RBI is to control the supply of money in the economy, that is how much money is available for the industry or the economic is control. I told you this function, the RBI control economic, how much available for the industry or economy. Second is the cost of credit, mean and what is the price that the economy has to pay to borrow that money. These two things are closely monitored and controlled by RBI. The inflation and growth in the economic are primarily impacted by these two factors. The various method employed by the RBI to control credit creation power of the commercial bank can be classified into two groups: quantitative control and qualitative control. Quantitative control are designed to regulate the volume of credit by the bank system, and quality measure or selective method are designed to regulate the flow of credit in specific use. To control inflation and the growth, RBI use certain tool like or weapon like CRR, that is cash reserve ratio, saturate liquidity ratio, it is called SLR, then repo rate, and then reverse repo rate. These are four tool or weapon by using RBI control the inflation and growth in our India. So what is cash reserve ratio? CRR. The current CRR is 4%. If RBI cut CRR in next monetary policy review, then it will be mean bank will be left with more money to lend or to invest. So more money can be released into the economic, which may spur economic growth. Now, for example, when CRR reach 6%, now this image is I found it in Google and I paste for better understanding for cash reserve ratio. Now, CRR, when any person deposited in bank 1000 rupees, then bank 6% means CRR, calculate the 6% of 1000 is 60 rupees. It going to deposit in RBI account in CRR form, cash reserve ratio form, and in bank you deposit 940 rupees in bank, in your bank, and CRR 60 60 means 6% of 1000 is 60 is deposited in RBI, so left 940 rupees. By using 940 rupees, bank lend to or borrow to or to invest to public or economic. If it reduce, means if it from 6% to reduce to 2%, then 2% of 1000 is 20 rupees, it going to 20 rupees, and left in bank 980 rupees. Means have bank more amount, then if bank have more amount, then he invest more in economic, like this. And CRR is the cash reserve ratio that going to RBI. Now currently 4% is CRR. Now next is, what is saturated liquidity ratio, SLR? Besides CRR, bank have to invest certain percentage of their deposit in specific financial security like central government or state government security. This percentage is known as SLR. Besides CRR, this is the part of amount that RBI taken from bank, that amount deposit from public. And beside it, SLR amount, and from SLR is the part of the amount that public deposit in a bank, and this is a certain percentage amount bank taken and deposit in specific financial security like central government or state government security. And this money is predominantly invested in government approved security, bond, gold, which means the bank can earn some amount as interest on this investment as against CRR, where they do not earn anything. Means CRR amount is deposited in RBI, and from this amount bank nothing is profit, but by using SLR bank get some interest amount, and this interest amount give to you. Now next is example, an individual deposits say 1000 in bank, then bank receive 1000 and has to keep some percentage of it with RBI as SLR. If the prevailing SLR is 20%, then they will have to invest 200 in government security. If SLR is 20%, means if you deposit 1000 rupees in bank, SLR, saturated liquidity ratio, this 20% means 200 rupees, they will be have to invest 200 in government security. And government invest in any this is the part of his business, this is the government invest, and government security is 200 security amount is deposit in, and from this SLR amount 200 bank get some interest. Now for clearly, so to meet both SLR and SLR requirement, bank have to earn 260, 60 plus 200 means SRR 60, that 4% I can say you before it, and then SLR 20% 200. When SLR rate 6%, SLR 20%, then any public or man deposit 100 rupees means I deposit 1000 rupees, bank have 740 balance. How? SLR 60 and SRR 60 plus SLR 200 means 260 is cut, and rest amount 740 each have in bank and distribute as individual or corporate loan. After that amount left in bank, this amount is on invest in another source. Higher reserve requirements such as SLR make bank relative safe, as a certain portion of their deposit are always redeemable, but at the same time restrict their capacity to lend to that extent. Lowering of reserve requirement increase the resource available with a bank to lend and help control inflation and people growth. Now, what is this? The meaning of this image in the form of a form 1000 rupees, RBI taken in the form of SLR, cash reserve ratio 60 rupees from 1000 rupees, and SLR in security amount 200, then apart left amount 740, and 740 amount is invest another source. If bank success, if nothing if, surely bank success, or ratherly if bank lost this amount 740 rupees in 40 rupees, then where and how bank pay back to you this 260 rupees the deposit on RBI. RBI giving you means RBI invest in another sources and from this amount it pay back to you. This is the security of bank. Next is what is repo rate. When we need money, we take loan from bank and bank charge certain interest rate on this loan, and this is called as cost of credit, the rate at which we borrow the money when we need. But similarly, same when bank need, who give the money? When bank need money, they approach RBI because RBI is the large resources of lender, and the rate at which bank borrow money from the RBI by selling their surplus government security to RBI is known as repo rate, and repo rate is short form of repurchase rate. Generally, these loan are for short distribution up to 2 weeks. If similar mean repo rate is the rate at which RBI lend money to commercial bank against the plague of government security whenever the bank are in need of fund to meet their day-to-day obligation. Bank enter into a agreement with the RBI to repurchase the same plague government security at the future that at a predetermined price. RBI manage their repo rate, which is the cost of credit for the bank. For example, if RBI rate is repo rate is 5% and bank taken loan 1000 from RBI, they will be pay interest 50 rupees to RBI. So higher the repo rate, higher the cost of short term money and vice versa. Higher repo rate may slow down the growth of the economy. If repo rate is low, then bank can charge lower interest rate on the loan taken by us. Suppose any bank, now in this example 1000 rupees, repo rate is 5%. When our bank going to RBI and in for 5% interest taken 1000 rupees, then we go and demand for loan, then bank given the loan in which interest he also increase 1 or 2% add for profit. If it 5% repo rate is increased to 10%, then bank how much demand for the interest is, if you add 2%, 12%, now it increase. So if higher repo rate may slow down growth of the economy, then where I am borrow money from bank, if it high rate, if it low rate, then anyone can be borrow the money. And if repo rate low, then bank can charge lower interest on the loan taken by us. If interest rate is come, then people interest to borrow the money from bank and invest. Now next is what is reverse repo rate. After repo rate, RBI lend money to bank, then the reverse repo rate is the rate in interest offered by RBI when bank deposit their surplus fund in the RBI for short period. When bank have surplus fund but have no lending or invest option, they deposit such fund with RBI. Bank earn interest on such fund. In reverse repo rate, RBI lend money from bank, or some case if bank have nothing else to invest anywhere, then this amount um, invest on RBI or deposit on RBI, and on the form of RBI given the interest. This is called reverse repo rate. In repo rate, if 5% is the interest rate when RBI given to loan, then if he or if he taken from bank loan, then it cut down interest rate. But if bank invest in RBI or given to loan to RBI, it is the security. means he is sure that his money is not lost. So that's reverse repo rate in this case war. Impact of repo rate as a cash reserve ratio and saturated liquidity rate. If CRR, SLR, repo rate are caught, if down, deposit rate, lending rate, loan rate may fall. A rise in money supply, growth, liquidity, purchasing power also. If SRR, SLR reported increase, then deposit rate, lending rate is also increased. Now, a term called basic point. In banking term, we can heard many times the basic point. What is basic point? Is often used in monetary policy review. What is basic point? 1% is equivalent to 100 basic point. Example, if repo rate is 7.75% and RBI increase it by 25 basic point, the new rate will be 8%, as 25 basic point will be equal to 0.25%. I think you understand the basic point. What is 25 basic point increase means 0.25% increase. 1% is equivalent to 100 basic point. Okay. Now next is, I think this is the Santa Banda RBI monetary policy. For your better understanding, the CRR, SLR, repo rate, and a reverse repo rate. For better understanding, one of the Santa Banda story here I add, and by using this Santa Banda story, we fundamentally clear the what the monetary policy of RBI. And this story, now the story is from uh, this story is one of the Santa Banda two friend. Oh, one day Santa say, I have Santa said to Banda, Santa say, I have heard recently that Mr. Rajan is the former RBI governor. After Rajan, Urjit Patel appointment, then Mr. Das is also currently. Now Mr. Rajan has reduced repo rate by 50 basic point. 50 basic point means 0.5%. And everyone is saying that this is a good for the market. Low EMI may also come down. What is rate cut mean? Actually, I want to understand this. Now Santa asks for to Banda the what is the repo rate, and by reducing the 50% 50 basic point, how our economic grow and loan of EMI how it down. So for that Banta to understand this, you first need to know how does bank function. So Santa why? Banta tell because all these are interrelated. Tell me what does a bank do? Santa bank take money from depositor and give loan to earn interest. That way that keep earn everyone happy and make a profit also. Banta correct, but there are more to it. Let me explain this is in a very simplest way. Bank need money. Bank can get money from depositor like you and me and also from RBI. But bank also need to pay certain interest to us and also to RBI. Santa say okay. Banta once again let us try to understand fast. What happen when we deposited say 100 rupees with a bank? I know that bank give that 100 to someone who need a loan, Santa said. But Banta asked, no, it is not that simple. Remember, though bank can earn interest by giving away loan, but it is also very risky. There are many cases of loan default. This may bank can put all our money into high risk area. It is put our into high risk area. It is to be protected. Santa, how? Banta say, okay, RBI has made it mandatory that upon receiving 100 rupees, bank first have to deposit 4 rupees with RBI. That is SRR 4% or 4 rupees to RBI. RBI keep this 4 in its current account and hence bank do not receive any interest on this account. This is known as cash reserve ratio, which is currently at 4%. Then after 4%, they he have left 96 rupees. RBI Banda say RBI has also made it mandatory that upon receiving 100 rupees, bank need to compulsory buy central and state government security of 21.50 rupees. Of course, bank will earn some interest income here. This is known as saturated liquidity ratio, which is currently at 21% 50. Mean SRR bank nothing get any interest from this, but in buying saturated liquid ratio bank get interest on it. After that, Santa said, okay, so you mean to say that upon receiving 100 bank can spend 74.50 at its own will? Yes. Now you can calculate, subtract from 100 rupees 4 and 21.50, it's left amount 74.50. So Banta correct. Now 74.50 left. But Santa say, but you were saying that bank have can also borrow from RBI. What interest bank pay to RBI? Banta, before 30 September, bank were paying 8.25 interest to RBI. When it borrow money from RBI, now this rate has been reduced by 50 basis point. So bank now need to pay interest to RBI. If it borrow from RBI at that rate of 7.75%, it is known as repo rate. Now 50 basis point means 0.5% each, subtract from 8.25, it's 7.75. Before 30 September, 8.25 interest. After that, 7.75 interest. Then Santa, can fixed deposit rate be affected by the reduce of the repo rate? But of course, if bank get money from RBI 7.75%, why will bank pay higher interest to you and me? 1 year fixed deposit rate is already revised by many banks and it is equally to or very close to 7.75. Santa said, but as now banks are getting money at a cheaper rate, then they should reduce the loan interest rate that is passing on the benefit it receive. Banta, correct. They should. And on that hope, market is cheering. If company get loan at a cheaper rate, they will like to expand their business. They will create more job, more income, and boost the economy. Santa, how is inflation linked to this? Banta say, see, when loan become cheaper, people learn to borrow more. People tend to borrow more. That means people will have more money to spend. This will increase the demand of good, and if supply does not increase to match this demand, then price will increase. So there is a chance that inflation may rise also. But well, yes, but inflation depends on many other fact factor as well, like production, industry, and agriculture, manufacture, export, import, foreign currency movement. It is so inflation may increase or may not. So one last question: like we deposit our money with bank, can bank also deposit their money with someone? But yes, they can deposit with RBI and earn interest too. This interest is typically 1% less than the repo rate. This rate is known as the reverse repo rate. Santa, great. So now I understand CRR, SLR, repo rate, reverse repo rate, and their impact on the deposit rate loan interest rate and on inflation and inflation. Thank you. Bandak say welcome. I think Santa understand the CRR SLR reported reward in the story. I hope you also understand clearly what is this for tool of the RBI. Friend, thank you. Please subscribe to my channel Make Smart. If you understand this tool of RBI, CRR, SLR, reported and repo reported, you can share with friend.